the equity markets. Manisha is standing by to tell us what's going on in the commodity space. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, I'm looking at the metal prices, which have seen a decline, especially after the China data that came in. The trade numbers came in on the much weaker side for the month of July. We've seen a double-digit decline for import and export numbers and much lower than what the street was anticipating. So the exports for the month of July on an year-on-year basis in China are down 14.5%. Imports also have declined 12.5%, and that is weighing onto the metals as a sector there. The steel prices, in the meanwhile, are trading at an 8-week lows. Iron ore has slipped to a 2-month lows, and copper is off its 3-month highs that we saw it trading in the couple of weeks ago. This is what we've done in the last 1 week in sense of many of these metal prices. So 2% down for copper in last 6 or 7 trading sessions. We've seen steel, zinc decline by 3% and 2.5% decline for aluminum. Iron ore continues to be your underperformer, 6.5% down in last 1 week itself. Within this space as well, I'm looking at copper because this is an area everybody says is going to be on the stronger side. The long-term fundamentals are strong. Remember, for a mine or a new project to come online, it takes 8 to 10 years. So the previous projects will come online this year and the next. But after that, post-2026, most markets believe that you are looking at lower supplies in sense of copper. Codelco, for one, which is the biggest copper producer, has revised output projection. For the first half of this year, we've seen Codelco output decline by 14%, and for this year now, they're anticipating output at 1.3 to 1.35 million tons or thereabout. The other important one to watch out for is that the U.S. Department of Energy in this week has added copper to critical material list. I mean, they perhaps have been the last ones to do that, because when you look at the list of countries who've already done that, that includes India, Canada, Japan, and various major other consumers as well. European Union, China, etc. already have put copper on a critical list there. Other thing to know is that copper is used for clean energy generation, transmission, storage, photovoltaic cables, infrastructure, and EVs, etc. So copper demand going forward in the next decade is expected to double from where we are right now, and not so much copper is going to be available. But looking at the kind of economic data China is throwing up for the near term, that is what seems to be putting some pressure.
Okay, Manisha, thanks a lot for that. Let's slip into a quick break. On the other side of the break, Bhanu Chopra of Rate Gain Travel